Hello and welcome to Business Morning right here on Channels Television. We see the markets are open now, but you need to watch this show before you make that trade. We have a packed show for you with top minds in investment banking sector and fintech this morning. But let's get to the top stories that set your agenda now. Let's see what's happening with oil prices. They're up today after the United States clinched a trade deal with the European Union and may extend a tariff pause with China, relieving concerns that higher levies could have hurt economic activity, limiting fuel demand. We're always looking out for what's going to happen with fuel demand and fuel supply, and that's driving prices there. But we're still not on $70 at this point. Will that break this week? We'll definitely watch out for that. 0.83% up, that's for Brent. WTI, that's up 0.83%. We know oil prices settled on Friday at their lowest level in 3 weeks, weighed down by global trade concerns and expectations of more oil supply from Venezuela. JP Morgan analyst said global oil demand rose by 600,000 barrels per day in July, year on year, while global oil rose by 1.6 million barrels per day. Then we also see issues in the Middle East there, with the Houthis announcing on Sunday that they will target ships of companies that do business with Israeli ports, regardless of nationality, in what they call a fourth phase of military operations against Israel over the Gaza conflict. So we see all of that there playing into oil prices this week. We're watching out, see what happens on later on 1 p.m. about Business Incorporated. All right, let's get some, it's earnings season right now, right here, and also with global markets that we track. And we see Transcore there, hotels, they announced its H1 unaudited results for the period ended June 30th, 2025, showing a 60% growth in the revenue against the same period in 2024. Gross profit increased by 71% year on year. The period which saw the launch of the company's world-class 5,000-seat capacity Transcore Center also recorded sustained profit momentum in H1 2025, growing gross profit by 71% to 36.21 billion naira from 21.19 billion naira of the preceding year. This translated to an improvement in H1 2025 gross profit margin, increasing to 76% despite a challenging macroeconomic environment marked by rising inflation and increased operating costs. In line with its promise to continue to deliver value, the company is rewarding shareholders with an interim dividend of about 1.024 trillion naira at about 10 kobo for every 50 kobo ordinary share, subject to appropriate withholding tax. We see the MD and the CEO of Transcore Hotels as Uzo Shogwe says that the sustained momentum is a reflection of their commitment to innovation, operational efficiency, and value creation for all stakeholders. All right, to other matters now. A report by the Nigerian Electricity Regulatory Commission, NERC, stated that 11 electricity distribution companies have a combined debt liability of 2.75 trillion naira. According to the report, the liability is in the form of taxes, trade payables, debts, and others. The report, however, said the DISCOs have a combined asset of about 3.61 trillion naira, and it also shows that in order for the DISCOs to demarcate their assets along states to ease the regulatory functions of the states when they enact the 2023 Electricity Act. The order was signed by NERC's Vice Chairman, Musiliu Oseni, and Commissioner, that's Legal Licensing and Compliance, Daffy Akpene, on July 25th. But the details were figures for 2024. And meanwhile, we see the TCN in a statement said the Nigerian Electricity Regulatory Commission and the National Independent System Operator have approved the critical infrastructure upgrade. We see electricity users in Lagos will experience intermittent blackouts as the transmission company of Nigeria begins a 25-day maintenance of the Omotosho-Ikeja West 330 kV power line, and that's scheduled from today to August 21st, 2025. That's from about 8 a.m. to 5 p.m. So I'm guessing this is going to impact businesses a lot at this point, because businesses operate, between those hours, and will definitely be counting the cost, for that. All right, so all the matters now, following the calls by security experts for expansion of government approach in dealing with insurgency and other forms of insecurity. The CEO, Lead Integrated Security Solutions, that's Ifeanyi Obinali, believes there's need for effective and professional services from the private sector. During a meeting with industry experts in Lagos, Mr. Obinali is asking for the cooperation of experts in the private sector to overcome the challenges. Take a listen.
There's a lot of security challenges in this country. Over the last 2 days, we spent the time at SASCON just talking about security challenges in the African continent. When we talk about security services, we're talking about trust and partnerships. How do we make it effective and efficient for you and your people? Also, security technology is an important part of what we're going to do in this country, because fiscal security cannot be efficiently and effectively effective if there's no security systems attached to it. That's why security technology is a very important part of what we're going to be doing.
All right, to all matters now, it's just 4 trading days left in July, but the month is so far the best for investors within the year, as its total gain currently stands at 12.1% after recording several new highs in both the market index and equities capitalization. Director for Institute of Capital Market Studies at Nasarawa State University, that's Professor Uche Waleke, was a guest on Capital Market over the weekend, listed some of the key factors driving the strong consecutive rally on the NGX within the last 4 weeks. Take a listen.
If you look at the Morgan Stanley Capital Index, if that is your yardstick, whether for emerging economies or for developed markets, the Nigerian bourse has outperformed. As we speak, year-to-date return is about 30% in Nigeria. We are at, for the Morgan Stanley Capital Index for emerging markets, is still in the negative, minus 8%. So that tells you that our market, market has actually done well, relative to global performance, and it's not difficult to see why. Particularly what we saw in recent time, the fact that we've had investors' optimism, on the back of strong corporate earnings. Really, apart from corporate earnings, you can also attribute that to favorable macro economic conditions. The fact that inflation in Nigeria has started cooling. The fact that, again, interest rates, yes, have not been rising. As a matter of fact, the relatively low yield now, so to speak, has also enabled this bullish trend we have in the equities market.
All right, now to our first conversation. We see ethical investing, also called socially responsible investing. It's the practice of selecting investments aligned with one's moral, social, environmental, or religious values, not just financial returns. And we see recently AFRINVEST, they launched a 2.5 billion naira halal fund, offering about 25 million units at 100 naira each. Thoughtfully structured around SUKUK, SHARIA-COMPLIANT equities, and ethical contracts, designed and approved by the Securities and Exchange Commission. It offers a low entry path for retail investors, especially in northern Nigeria. Well, joining me now to unpack this, we have Dr. Ike Chioke, as the Managing Director, AFRINVEST West Africa. Joining me right here in the studio. It's great to have you, sir.
Good to have you.
And it's been quite tough, getting you on the show. I know you're a very busy man, and you wear a lot of hats, at this point. But thank you so much,
it's my pleasure
for coming on today.
Yes.
And I can imagine, I'd just like to get a brief overview of what you've seen, in the investment climate so far in Nigeria. We're seeing, it almost seems 2025 is the year of record highs, with all of the uncertainty.
Well, I think you have to realize that when you're down, coming up, you're really coming from a bottom.
Right.
And so the climb out of the trough we've been in over the last few years is, creating a momentum and a spike in the market that's exciting people. Clearly, coming out of COVID, the contraction we saw in COVID, and then you see the challenges we witnessed in the economy once the new president came in 2023, taking out fuel subsidy. The central bank governor came in, removed exchange rate subsidy, and created more transparency. That was a massive shock we went through in 2023, coming into 2024. And now, suddenly, we seem to have digested the shock. And people are seeing now a semblance of, what I call green shoots of growth, springing out, and
Right.
people are quite excited. Things are looking more stable. Importers can go to their banks and, bid for FX and, get it without having to speak to anyone at the central bank. So this combined with the president's, focus on, growing the economy, we'll put aside the borrowing for the moment, it's what is really encouraging. It's
Right.
encouraging the market. And
So,
you can see some of that. Inflation is easing as well, and there's a moment, interest rates are easing off, so there's a shift from fixed income investments into the equities markets. And of course, equities are what most people see. The momentum is there, and so everyone is quite excited.
so it seems, for the case of Nigeria, all we needed was a change of leadership to see this bullish momentum. That's almost what it seems like at this point.
Well, we need the change of leadership, but we also need leaders that are able to plan long term. What we're seeing is a very short period of time in the space of an economy. So planning long term and putting in the fundamentals and realizing that sustained growth takes time. Just like if you want a young child to become a doctor, they're going to go through nursery school, 2 years, primary school, 6 years, secondary school, 6 years, university, 6 to 7, including residency.
Right.
And then you really have to plan for the long term. Unfortunately, our political cycles have tended to shift our economic trajectory quite abysmally, especially in the context of what is happening around us, the broader economy, global economy, trade issues. And now, we have Donald Trump at the White House, and, if he coughs, we're going to not just catch a cold, we could go into complete sort of Ebola symptoms. Yes, exactly.
Hypothermia.
Exactly, yeah. So we have to be extremely careful how we plan our own economic growth parameters.
Right. Yeah. And for the global space, I guess, President Donald Trump is another bull, for that side of things. But let's not go there.
Yeah.
Let's hit the matter at hand now. Ethical investing. We've seen what's happening with, SUKUK in Nigeria, the oversubscription seems successful, at this point. It seems investors are quite, inclined to, ethical investing at this point. So it almost seems you don't need to sell ethical investing. Is that what it means at this point, what we're seeing, the way investors are reacting, to SUKUK?
Yes, if you were to take the marketing of the DMO's last issuance, the 7-year SUKUK, that was a $300 billion naira issuance. That witnessed a subscription of about 2.2 trillion.
Wow.
I can see that it was massively oversubscribed. You can say for sure there's a real market for ethical-based investments.
Right. And
the challenge for us is that if someone is faith-based in terms of their investment options, then they are quite limited. So when a SUKUK comes out, that's why you see a lot of cash coming into that particular space, which then, turns, the common sense the other way around. We actually need to do more SUKUKs. We need to do more Sharia-compliant investment to be able to meet the market demand for, our Muslim brothers and a lot of other people who have ethical principles when they are coming to the investment space.
Right.
Yeah.
So I guess whichever faith, it would apply to any faith?
Yes, of course. The AFRINVEST'S HALAL Fund, is a Sharia-compliant investment instrument, but it also works for ethical, principled investors. So everyone is invited to buy into it because it has the framework. But we're using the Sharia-compliant framework to launch the fund, and in that context, we have strict guidelines that it must comply with. For example, it's a hybrid fund, so it invests in fixed income instruments and invests in equities. But for fixed income, we'll specifically look at, SUKUK bonds, the FGN SUKUK. State government can come in and do SUKUK bonds, corporate SUKUKs. In the equities space, we will not take all the, stocks listed on the exchange. We'll look at specific stocks. So if we come to banking, for example, we'll be looking at banks that are Sharia compliant. Like a Jaiz Bank or a Lotus Bank, so long as they are listed. But we will not invest in companies that are doing, pork, for example, meat, or weapons, or what would I say?
Alcohol.
Alcohol, for sure, exactly. So those will exclude quite a body of a bunch of stocks that are doing things that are not in compliance with Sharia principles.
But does it limit profitability? You know, when you have to do away with all of these sides when it comes to alcohol,
yes and no,
business.
but remember, for the person that is Sharia, is looking at investments from Sharia principles, the option could be either very, very low returns or a higher return based on what the basket now is able to offer. If you look at the last SUKUK bond, it priced around 19.5%. And if you are keeping your money in, say, a Sharia-compliant bank, and you are earning 3% or 5%, definitely buying the bond is a whole lot better. You understand? So our HALAL fund is designed to track the 10-year SUKUK bond of the FGN, and the last issuance of 10 years was about 2 years ago. That's the 2023 issuance, and that was 15.75%. Obviously, interest rates go up and down. It's interesting that the 7-year SUKUK that issued in May is priced about 200 basis points higher, actually 400 basis points higher than the 10-year that was issued in 2023. But as interest rates come down, you would expect that rates would also trend downwards. But from the context, from the point of view of investors, it's either I have zero or I have a whole lot more.
Right.
And it's good to create that opportunity for faith-based investors. Yeah.
Right, quite interesting. Let's break down the HALAL fund now. If you can put that up for me, that's allocates about 70 to 100% to SUKUK and fixed income, up to 30% screened equities.
Correct.
You can put that up.
Exactly.
Up to 25% in halal contracts.
Correct.
We have the Jara, the Musharaka.
Musharaka.
And minimum 10,000 naira, 90-day lock-in.
Yes.
Benchmark returns about 19% tied to FGN 10-year SUKUK, as you just mentioned. So looking at all of this, do you think investors will be keen, at this point? Do you think the appetite is wet?
Absolutely, absolutely. We're already seeing an uptick in the price of the halal fund. We launched last week at 100 naira. As of this morning, it's already gained 2 kobo. So if you want to buy, it's 100 naira, 2 kobo.
Wow.
So you have to, come in because the price is already out there in the market. So yes, we expect to see a lot of demand. And the reason we launched this SUKUK bond, halal fund, is to meet the demand. We opened our Kano office last year in March, and every other inquiry was, okay, do you have Sharia-compliant investments? And then we just realized we had already been working on an ethical fund, but just opening that office made us realize the market opportunity we're missing. And so we worked with our financial advisor. Marble Capital is an investment bank that's focused on Islamic investments, and they guided us together with the team at the SEC. So we worked very hard to pull this together and make sure we have a product to serve the market.
Quite interesting, and you did mention the SEC there. If you look at the Nigeria's Sharia-compliant investment landscape, you see the Nigerian Securities Exchange Commission is aiming to list about 50 Sharia-compliant products.
Absolutely.
Worth about 5 trillion this year.
It's an aggressive and ambitious target, but it's doable. I think the market can really take all of that.
Right.
Yeah, it creates a whole basket of investment options for investors.
Right. And, when you see this kind of investment options and this kind of target, what's the spillover effect for the economy?
Of course, growth. Because, any time a security comes into the market, it means some corporate entity behind has raised money to then invest. And, from a Sharia point of view, like, if you think about FGN SUKUK, they're Ijara-based contract. That means the federal government has now raised money and are paying contractors to build roads and bridges, so there's stimulation of the economy. So that's exciting. If you think about 5 trillion naira of issuances hitting the market through Sharia-compliant investments, that's another 5 trillion naira of money that the federal government is not putting in. It's coming from you and I. And if you think about the pile of money we have in our pension funds, the funds we have sitting dormant effectively in our deposit accounts, our savings and current accounts in the banks, some of these monies can go into appropriately structured investments, which is a key driver to the economy.
And I saw some data recently, and the dormant accounts are rising.
Let's not even go to dormant accounts. But I think if you look at the banking sector, I think it's about 178 or 180 trillion naira of deposits in the system. And meanwhile, we're looking for cash.
Wow.
So I find Nigeria to be a contrast all the time. We have, oil on the ground, and we're sometimes looking for petrol on the streets.
Right, and we're importing oil.
Yeah, we're importing oil.
Right.
We have a lot of cash in our banking system. We have a lot of cash in our pensions accounts. But sometimes, companies are looking for cash to do business, and it's a question of structuring and having the right companies being appropriately profiled with the risks packaged properly, so that investors will know where to choose and how much risk to take for this level of return, because you always have to balance the risk to the return profile.
Right.
Yeah.
And, definitely we're talking investments, at this point. And, H1, that's behind us now, but we've seen a lot of action in the first half of 2025. What are you seeing in this second half? When it comes to the investment landscape, everything in general at this point, even crypto at this point, because everybody's investing in a lot of things at this point.
If you look at the equity market, for example, the year started slowly. By the end of Q1, we were up only 2.7%, the all-share index. Then we saw some momentum picking up. By the end of Q2, we are now up 16.6%. Now, guess what? As of Friday close, we're up 30.6%.
Incredible.
Incredible. So, and this is what is driving a lot of interest, because people are coming back. If you're up 30.6%, imagine if you put in 1 million naira in January. It means you have 1.3 million. That's a lot of cash. You could actually, sell 20% at pocket 300,000, and you still have your 1 million naira in the bank. But if you look at the composition of that growth, you see banking sector up 44%, ICT sector up 40%. There's an interesting one there, which is the agri sector, and that's really comprising of Okomu Oil and Fresco. Guess what? They're up 178%.
In just the first half?
Yes. So it means if I had just put in 1 million naira, I'm at 1.8 million naira today.
Wow.
And, we started out the year with a base case market growth outlook for the full year 2025, thinking that we'll end up the year base case scenario about 30.8%. So far, we've already met our base case, as of last week. So that means we are now coming back to the market saying we could see a potential upside to up to 44, 45% for the full year. Bearing in mind that there will be profit taking across the year, and also bearing in mind there are some macro issues that would affect us that we've not thought about, and also bearing in mind considering what could be happening outside of Nigeria.
Right. So definitely we know nothing goes up forever.
Yes.
At this point. But in this case, should we be expecting a major pullback, or just random pullbacks, but not a correction?
No, what we see is, because for a long time interest rates have been very high, investors had all sort of moved to the fixed income space. But as you see interest rates coming down, investors are now shifting to the equities market. And that trend is likely to continue. So we've seen sort of contraction of rates from sort of the mid-20s to now the high teens. So 26, 28%, for example, last year. Even the FGN was borrowing in Q1. They front-loaded quite a lot of their borrowing. And, it's a bit much more expensive than now what they are seeing, where you could see sort of papers around, 16, 17, 18%. But as rates come down, and forget the CBN still keeping the MPR at 27.5%, we expect to see that continuous shift of investment moving from the fixed income space, where they feel there's upside is now uncapped, to now go into the equities, and that could create more stimulus for the equities market. But bear in mind that if you're coming in now, you're a bit late in the game, so some of us who came in early might take your money and profit from it. That means we'll exit the market, and the market may not go up as high.
So you don't want to be exit liquidity. That's if you're not invested at this point.
But it's always a good time to come to the market, so that you have a long-term view.
Exactly.
Yeah.
Excellent. Fantastic. It was great having this conversation with you.
Always a pleasure.
At this point, Dr. Ike is the Managing Director, AFRINVEST'S West Africa. Thank you so much for coming on today.
My pleasure. Thank you.
All right, we'll take a break now. When we come back, I'll be looking at financial services sector and its contribution to the first quarter 2025 GDP for Nigeria. That's at the moment. Just stay with us. All right, so we'll see the revised GDP for Q1 2025 recently rebased to reflect an expanded economy. It shows real growth of 3.13% year-on-year, up from 2.27% in the first quarter of 2024. If you can put that up, and we see it's also with the total GDP valued at about 372 trillion naira. Services sector now contributes over 57% of the GDP, with the finance and insurance subsector alone accounting for 3.6% of the total GDP. The rebasing incorporated sectors previously undermeasured: fintech, digital economy, e-commerce, creative and informal activities, delivering a more accurate and diversified economic portrait there. Joining me to unpack this now, we have Mr. Chike Nwosu, who is the Managing Director of PalmPay. Thank you so much for joining me today, sir. Good morning.
Oh, no, it's a long time. I hope you're good.
Quite a long time. I've been trying to get you on for a while now, and finally you. I know you're a very busy man, but welcome.
Yeah, thank you very much. Thank you.
So what do you think, we see now a lot of sectors now included in the rebased GDP. What do you think the inclusion of a larger, more detailed financial services sector, in the rebased data, what do you think is telling us about the maturity of Nigeria's fintech ecosystem?
Okay. So, Ladi, you know that if you look at the contribution of the fintech, not just in the financial ecosystem, but in the whole overall economy of Nigeria, it cannot be overemphasized. So you can agree with me that the fintech has done quite well in Nigeria. One of the things fintech has done is to make accessibility of financial services very accessible, despite the status of the people, whether they are low-income earners, whether they are, doesn't matter their social status, it doesn't matter their economic status, it doesn't matter where they are, whether in the villages, whether in the cities, people have access to financial services, access to credit, access to savings, access to several other services. Even the health tech is also there, even the agri-tech is also there. So the fintech has contributed so much, and this has shown maturity of the fintech in the financial ecosystem. This has shown that the fintech operation in Nigeria has contributed so much, not just only in the financial ecosystem, also the economic development of the country. Thank you, Ladi.
All right, so I'm going to cast your mind back to when we had the Naira redesign. I believe that was the moment, for fintechs at this point. Do you think that was the real catalyst, that's pushed the fintech ecosystem this far?
I think the catalyst is not just the Naira design. If you remember, during coronavirus, the during 2020, when we had a coronavirus in the country, people were staying indoors, there was no movement. I think that was the catalyst. That was when people realized that you can do transfer, you can make payments, you can make your purchases. That was when people started seeing the importance of fintech, not just in the ecosystem, also in the economy. So that is just actually the catalyst. But there was also a larger impact during the Naira design, but the catalyst started in 2020 during the COVID-19.
Right, so I guess it's before the Naira redesign that we already started to see that movement there for the fintech ecosystem. But in what ways, is the rebased GDP data helping to, reshape perceptions, of fintech's role in Nigeria's economic development?
Yeah, I've said this many times, in the past, before now, there was a kind of a trust issues for fintechs in Nigeria. In fact, majority of the people see fintech the way they see Ponzi scheme, maybe pre-2020, maybe like 2018, 2017. But as time goes on, the trust begin to develop. People see the kind of services, a lot of products started coming into the market, the service product, the insurance product, the credit product. The fintech also started being very, very stable. The services, the quality of the services was also top notch. For instance, there are some fintech like Pampi where their transactional success rate is over 99.98%, and several other things started happening. And they started also moving into the rural communities where the conventional bank might not be able to reach. So they were able to reach to these people. You know, you can bear with me as far back as maybe even as 2017. You see many people, car riders and bus drivers, barrow pushers, they don't have bank accounts. But as a result of fintech, these people have bank accounts today. They have access to financial services. They can access credit. So the trust has started growing. And now government also has also seen the importance of fintech in the financial ecosystem and also in the economy of the country. They have been also make these services affordable and also accessible to a common man. So I think the trust has grown and the importance of the fintech has also been felt within the economy. Thank you.
All right, so, with financial services now contributing more, visibly to the gross domestic product, what new responsibilities or expectations do you think, fall on fintech players now, in terms of, national development?
Yeah, as at 2023, our financial inclusion rate was about 64%. As at 2024, we get to 74%. So we still have a gap of about 26% of adult population of Nigeria that is still unbanked. And this responsibility is all on the fintech to ensure that a majority of these people stays in the rural communities. So this responsibility, I can tell, is all on the fintechs to move into the rural communities and get more people into the financial services ecosystem. That is one part. And the second part is access to credit, the microcredit. Fintech also have to also come up to this and bridge the gap, because there are some people, for instance, there are farmers in the rural communities who want credit to buy farm input, to pay for labor, to do so many things, even during harvesting of their product, but they don't have the money. Because of fintech is also make these services so accessible, very quick and very fast. So I feel that it's also a responsibility of the fintech to also come and bridge this gap, which some of them are already doing. So this is actually another responsibility for fintech in the financial ecosystem.
Right. And, looking at, the contribution of financial services, to the GDP, growing, at this point, I was having a conversation with a friend recently, and he said that, why won't financial services do well, since the traditional banks keep charging us for a lot of things, at this point. You just keep seeing debits here and there, and that's why they keep reporting bumper profits and all of that. Do you think the fintechs are saving us, at this point?
I can only speak for myself. For us, I think fintech is doing a lot. Most of the fintech services, even the transaction, something like transfer services, they do it free of charge for the people. So I think this is one of the ways they are making sure that there is not just that the financial services is accessible, it's also affordable. So there are so many products they are providing at a very, very considerable rate, or sometimes at a free rate. So fintech is also bridging that gap as well.
But do you think the fintechs can maintain it, or at some point will also turn into the traditional banks?
I don't think they will turn like a traditional bank. Fintech is fintech, traditional bank is traditional bank. The modalities and the operations strategies are totally different. They are not the same.
All right, so let's pivot now. Do you think the next phase of fintech growth in Nigeria will be driven more by maybe lending, savings, wealth management, or insurance? Do you think that's going to come into
all of them? Definitely, all of them. There are going to be a lot of service product, which is high interest yielding, credit that is also affordable, insurance, very important because majority of Nigerians have this kind of advanced insurance. So I think fintech is also going to drive that product into the market because many people don't know that with 1,000 naira you can even get a health insurance. People who cannot afford to go to hospital with health insurance, you can go to hospital. So this awareness is also coming on board. So fintech is driving this awareness. So I think all of them is also going to be part of what fintech will be doing in the next stage.
Right, and let me take you back to also the EMTL fee there on, I think, transfers over, I think about over 10,000. Do you think customers have gotten accustomed to it and they're just like, they're just okay with it at this point?
I didn't hear you. Come back again to that question.
The
sorry.
EMTL, electronic money.
Okay.
Are customers okay with it now? Everybody's moved on.
Yeah, of course. This is a government policy, so there is nothing we can do. We have to follow the government regulations, and I think customers are okay with it. They're not complaining about it again.
All right. No, they're not complaining anymore. All right. I guess that's good for business at this point.
Yeah.
But how can fintech platforms, deepen their relevance, across broader financial services, that value chain, without overlapping too heavily, with the banks? Because there's been that conversation about some kind of competition between the traditional banks and fintech, but they say it's a collaboration.
Yeah, I think for me, the fintechs and banks, their operations are most of the time is complementary rather than competitive. Because if you look at the banking operation and you look at the fintech operation, they are totally different. Let me give you, for instance, it is very easy for PalmPay to move into my village in Owerezukal in Anambra State. But it is difficult for a traditional bank to go there. So what fintech is doing is that some of those services that will be very difficult for traditional banks to, give to the people, the fintech is bridging the gap to make sure that those services are being provided for the people. If you go to many villages in so many rural communities, you see a lot of fintechs. You see a lot of their agents in those rural areas, providing payment services, opening accounts for the users, taking savings, and so many other services for them. So they use their agents to reach, fintech use their agents to reach to this type of users. But it is difficult for bank. Before a bank can put a mortar and bricks office in any village, first of all, they have to do a feasibility study. And when you do a feasibility study, renting a bank, putting all the infrastructure and the rest of them, you can see it's not profitable. So they won't do that. So I think banks and fintech, to me, majority of the, in fact, 95% of the time, they are not competing, they are complementary. So, and I feel that it's also better that way for them to continue to collaborate and also to make financial services accessible to all Nigerians. And with that, we can also, improve the financial inclusion, which is, I know that is the priority of the government of Nigeria at the moment. Thank you.
All right, thank you so much for that now. But we're going to interrupt our viewers on DSTV now. We're joining a live coverage of the Diaspora Bridge, a live coverage of that event that's stemming the gap for a better Nigeria. That's for our DSTV subscribers, but you can continue watching Business Morning on all our other platforms at this time. Thank you so much for staying on, Mr. Chike Nwosu, the Managing Director of PalmPay. And we've been having an interesting conversation here about the fintech industry and seeing contribution to our first quarter 2025 gross domestic product growth there. So, at this point, we're seeing fintechs now, included when it comes to financial services. We're seeing your contributions now more apparent with the Q1 GDP. That's the rebased data. But which financial products or services do you believe remain, significantly underserved, despite fintech expansion in the country?
Yeah, you look at the credit and the insurance is actually underserved. But the major reason for this is because of a regulation. Some fintech have the capacity, they have the resources to provide some products, but you cannot provide a product that is outside your permissibilities, because every license, like we have what we call the mobile money operation license, we have our area of permissibilities. You can't go beyond that area. If you go beyond that area, that means you have breached the compliance. You have gone against the regulation. So this is actually one of the limitations majority of the fintech is having in Nigeria. They have the capacity, they have the resources, they have the products to give to the people, but because of regulation, you cannot do that. So these are the challenges. So one of the underserved product is credits and insurance. So thank you.
All right, so there's another issue I've also noticed now, with financial services sector and some customers that have accounts with, some of the banks and the fintechs. It's about data now. We have BVN, we also have NIN, and sometimes for some reason, when they're collecting your data for either BVN or NIN, sometimes they just make a mistake with your name and all of that. And you see that some people, maybe the name on the BVN doesn't match the name on the NIN.
Exactly.
How are you able to manage this, with customers that have this issue? Because I see the alert there. It says your NIN and BVN does not match. How do you manage it?
Honestly, it's a very difficult situation. But what we have done is that, and I think also from the side of NIMSI, what happened is that I think they have started there's some adjustment in the portal of NIMSI to make some corrections on your NIMSI, on your NIN, and because of that, when such a problem happens, because you cannot onboard a customer into the platform that has where there is a contrast in the name or even in the phone number or whatever it is, because if you do that, and then when the CBN comes for inspection and they notice that, that means you are breaking a compliance, because fraudsters also can use that. So most of the times you must send them back to go back and to the Nigeria Identity Management Commission and make the correction. When they make the correction, they bring it back, then you can onboard them.
Right.
There is nothing any institution can do if those things are not corrected. You cannot onboard people who have disparities in their names into the platform. It's very difficult.
Yes, and it's quite funny because I've seen a traditional bank accept money into that account that they knew that the NIN and BVN they match, but money could enter the account. But when you're not trying to transact, they tell you you can't debit the account because of the mismatch in name. So why receive in the first place?
Yeah, for the fintech, it doesn't happen like that, because if you upload your name, then when it goes to the system and it doesn't match, it will go back to you and say that this cannot match. Then they cannot onboard you until you make the correction. So the system is already configured to dictate mismatch names.
All right, so what are you seeing in the second half for fintech? What can we expect, for the fintech ecosystem in this second half and beyond?
Yeah, it's a deepening financial inclusion in Nigeria. So most of the fintech will also move to the rural areas. There's also going to be a lot of awareness in financial literacy program, and also going to be more products that will appeal to the people who live in the rural areas. So this is what we'll be expecting in the second half of the year from most of the fintech.
All right, thank you so much. It was great having this conversation with you. That's Mr. Chike Nwosu. He's the managing director at Pampe. They're one of the leading fintechs in Nigeria. Thank you for coming on today.
Thank you, Ladi. Thank you so much for having me here. Thank you very much.
Fantastic. All right, we'll take a break now. When we come back, we'll find out what to expect. That's the global economy this week. What's going to drive sentiment? You find out now. Just stay with us. Let's head to global space now, find out what's going to drive sentiment, and we have John McQuarrie with the details at this point. And I'm not going to call this red. Sometimes I get colorblind, but I don't think this is red. This is like wine.
But yours is red, yeah?
Or is it wine? I think it's wine.
So it's wine.
So
we're going to drive the market into the wine territory.
Wine. Is wine good? Is it a good or a bad thing?
We'll find out.
We'll find out.
And your pocket will find out too.
Yeah.
Good morning, Ladi, and good morning, everyone. Welcome to Global News segment on Business Morning. First of all, let's tell you that this week is going to be a very busy week. Economic data coming out everywhere, especially from the United States. So let's look at this. First of all, there's the U.S. trade balance and retail and the wholesale inventories data. That's coming from the United States. Of course, that will measure the purchasing power available to Americans. And then also there's the U.S. consumer confidence and job openings. That's also very important to tell you what job is available. You know, President Trump is very busy trying to attract the manufacturers into the United States. And of course, this will show that this obviously measuring the domestic economy and activities, that's the GDP, that's also for this week. And then it's earnings season even here in Nigeria. This week we're expecting the Microsoft, the Apple, they are set to release. So we know that the market is going to be very, very active. I don't want to call it volatile. It's going to be very active because, of course, the data come out and then people will react to it. There's also the U.S. employment report and unemployment rate and hourly wages data. So a lot of things to measure how the U.S. economy is looking. There are others also. The big one is also this week, the Fed. The Fed is supposed to meet and we're supposed to get a decision from the Fed this week. And guess what? August 1st, we have been talking about and counting down is on Friday. So yes, this week also we have the U.S. tariff deadline, so you can expect a lot of movements in the market ahead of that and even on that day, even though we see some trade deals coming up, which may reduce the volatility that that might bring to the market. The Bank of England also is expecting, we're expecting them to share their consumer credits data this week. That's from the UK. And in Europe, we're expecting the Business and Consumer Survey, especially now that they have settled with the United States, even though it's too soon to capture the impact in data. But of course, we see markets already reacting positively to that. Australia also, they're expected to release their inflation also this week. And then in Spain, consumer confidence data is expected. So it's a very, very busy week around the world. You didn't hear about Nigeria, but we'll keep giving you the data as they come back here in Nigeria. As you know, we're still trying to find our feet when you compare us to some of these countries when it comes to data. I mean, there's job openings data, there's wages growth data in the UK. We don't have a lot of that, but we'll stay at it, and hopefully soon our NBS and our CBN would be able to give us some of this data. And then when we're talking about things to watch out for the week, we would also have a Nigerian expectation right there. So apart from things to watch out for, yes, it's that big news, which is the agreement between the United States and European Union. They've agreed that trade deal ending months long standoff between the two of the world's biggest economic partners after make or break negotiations between President Donald Trump and European Commission President Ursula von der Leyen in Scotland. The pair agreed on a U.S. tariff on all EU goods of 15%, and that's half of the 30% that was supposed to be initially import tax. Trump had threatened to implement starting that on Friday the 1st. And he said 27-member bloc will open its market to U.S. exporters with 0% tariff on certain products. And von der Leyen also hailed the deal, saying it will bring stability for both allies, who together account for almost a third of global trade. We're going to settle more on this. That'll be Ladi and our colleague from DW. Of course, that will be a major conversation during Business Incorporated. Just wanted to let you know in case you want to know more details about that. So please join Business Incorporated. Oh, beg your pardon. That'll be me, myself, and the DW. That'll be at 1 p.m. During Business Incorporated. We'll be discussing the details of it from the perspective of Germany and the EU representing the bloc. So that'll be 1 p.m. and I'll be having that conversation with our DW colleague. Other than that, senior US and Chinese negotiators are meeting today in Stockholm to tackle the long-standing economic dispute at the center of the country's trade war, aiming to extend a truce, keeping sharply higher tariffs at bay. China is facing an August 12 deadline to reach a durable tariff agreement with President Donald Trump's administration after Beijing and Washington reached a preliminary deal in June to end weeks of escalating tit-for-tat tariffs. without an agreement, global supply chains could face renewed turmoil from duties exceeding 100%. The talks, led by U.S. Treasury Secretary Scott Bessent and Chinese Vice Premier Le Hyphen, take place a day after that agreement between President Ursula von der Leyen and President Trump at the golf course in Scotland to try to clinch a deal that would likely see a 15% baseline tariff on most of EU goods. Trade analysts on both sides of the Pacific say the discussions in the Swedish capital are unlikely to produce any breakthroughs, but could prevent further escalation and help create conditions for Trump and the Chinese president to meet later on this year. Previous U.S.-China trade talks in Geneva and London in May and June focused on bringing U.S. and Chinese retaliatory tariffs down from the triple-digit levels and restoring the flow of rare earth minerals halted by China and NVIDIA, H2O, AI chips, and other goods that were halted by the United States. So far, the talks have not delved into broader economic issues. They include U.S. compliance or complaints that China's state-led export-driven model is flooding world markets with cheap goods and Beijing's compliance. So we have a whole lot of Trump talk as usual, as we always have it. But I guess the good thing is we're seeing trade deals come together for the good of the world at the end of the day, Ladi. So we see the EU now and more talks with China. Hopefully that will also yield some results, even though their own tariffs, I think August 8th or so, and not Friday, which is the August 1st. But I think the more worrying thing for us, Ladi, we just saw a deluge of data that we're expecting this week, and none from Nigeria. Very unfortunate. And yet, it's data that drives investment. It's all about data. Sentiment.
You know, at this point, investors are watching data, and that's driving, you know, where they're going to put money next, you know, at this point. But we'll get there.
Ladi, you should do it. You should open a company and just gather data, economic data, and share with Nigerians.
Even with this job.
Yes.
We'll see how we can juggle that. Thank you so much, Ailey, for giving us those details of what's playing out in the global economy and what to expect. It's a bumper week here. But the markets are open right now in Nigeria. That's the equities market. And I had a look at the investing.com terminal, and I see that we're up just about 8 basis points right now, trading right now. Most active stocks, Axis Holdings, Sovereign Trust Insurance, QTX, LLX, those are the active trades right now. But thank you for watching Business Morning. I'm Ladi Williams, and John McCall will be back at 1 p.m. for Business Incorporated. Have a profitable day. Bye-bye.